Since that's the debate, the PSU rally definitely did take a breather. There's evidence and data to showcase that. Many defense railway names, like I highlighted, are down a good 20 to 30% from their peak. So does this mean these stocks have hit their peak, or is this just a correction in an otherwise intact bull market? Here are what market experts have to say when we've been debating the same point with them.
Defense, railways, I mean, it's a story which has played out far too fast, far too soon. And there's too much of money that has chased too few stocks in this space, and everything is beyond comfort levels in terms of valuation. So the macro theme out here is pretty decent, but I think probably, the stock prices are discounting next 3, 4, 5 years of earnings, which to my mind is a bit too early.
I think defense is very expensive. The margins are high. The market caps look very high versus global comparables. So we're not there in defense too much. Even on energy, downstream and midstream, we're not there because there is too much capex happening in those companies. And generally, PSUs, when they do large capex, the profits don't grow too much.
You have a risk on the PSUs, as always. You see the OMC stock, highest, riskiest. I think that's the real gamble. If you ask me, if you need to gamble, don't worry about option. You got to gamble and say which trend is what's going to happen to the OMC next quarter. I think PSU stocks, to by and large, is going to have a bigger problem. And number two is the chemical stocks. Overpriced to a point which I don't understand how they're priced in terms of PE multiple and the growth. So two sectors very clearly.
On the PSU side, if you look at it, there I would say the power sector, for example, the utilities, okay, where I mean, especially in the power side, power generation and power transmission and distribution side, there has been clearly an uptick in terms of revision in the targets, right? What has been said earlier. So that clearly opens up a better growth opportunity in that sector over the next 5-year time frame. And while the valuations are on the higher side, but in compared to the historical average, but absolute terms, they are still reasonably okay to really look at that sector.
One of the reasons why at least we stay away from is that it's not full deregulation and it's going to be sensitive, politically sensitive subject. And it's fine, in a country like India, if government wants to have a couple of PSUs for handling the inflation, it's totally fine. And we don't have to invest into them. But in general, government is trying to put a lot more investments into the exploration and building capacities of the refining, given our energy needs are going up. Also, some of the PSUs are also investing significantly in the renewable capacity, also which is serving the overall purpose of the government as well as the country. So I think, they're all in the right direction.
Right. So that was a collection of views coming in on PSUs, railways and defense. But let's take...
If you like this video, then like, share and subscribe to ET Now.